The S&P 500 was up 0.53%, closing just above the 60-70 level. We've basically been slowly grinding higher since Monday's drop after the DeepSeek AI market reaction on Monday morning. We continue to see gamma exposure at the 6100 strike and the 6150 and 6200 strikes. The 6100 strike continues to see large volume in the options market coming in every single day. And interestingly enough, when we tagged the 6100 level back here about a week ago, we saw the resistance, of course, over several trading sessions before finally rejecting. And during that resistance, we did not have gamma exposure growing at 6150 and 6200 like we currently have. And so what I think this means going forward is that there is a higher probability for price to continue through the 6100 level, consolidate before moving higher to these higher strikes. We continue to see volume coming in at these higher strikes in the options market, and I think a lot of market participants are expecting that earnings season is not going to be quite as bad as a lot of investors were thinking, and so the probabilities for a move through the 6100 level are continuing to grow into February. Taking a look at our gamma exposure data graph, our implied volatility reading is 54.8, which means implied volatility has been lower 54.8% of the time in the last 52 weeks. And that's pretty interesting considering that the VIX is sitting below 16. So we're in a low volatility regime. This is conducive to buy the dip. Another thing that factors in positively to buy the dip is positive gamma exposure. So we have two factors here continuing to provide a decent environment for investors to come into the market. And you can see that in the gamma exposure data, mostly positive gamma exposure, very little negative gamma exposure on a net basis.
Thanks, Anthony. Yeah, I like that idea of the market consolidating after reaching the 6100 area on SPX. And potentially, one thing that we might see as a part of that process is the VIX at least making some additional attempt to spike. A few days ago, after Monday's spike, we said that, we wouldn't be surprised to see the VIX come back in and potentially close the gap. We're pretty close to that. The VIX could still come down a little bit deeper to the 15 area. Right now it's at 1584. But one thing that caught my attention is we're starting to see some higher volume, the light blue line, which is today's volume. And we had a pretty large spike in volume at VIX 30. And now moving over to the chart, you can see that the VIX is back at this area around 15. Like we said, we're a little bit above 15. We could definitely drop down to 15 and still not invalidate this idea that the VIX may spike again. But we're back at this area that's acted as support really, since November at least. So, we're kind of getting to an interesting area where the VIX may try to reassert itself again to the upside.
Thanks, Sean. Let's take a look at Tesla. Tesla trading just below 400 in the post-market today and reporting earnings yesterday. We actually didn't see very much earnings volatility, trading just right around the 400 level. And you can see between 380 and 400 has basically become a very nice support area for Tesla over the last couple of months. And we've seen multiple bounces off of this 380 to 400 level. And following the earnings report yesterday, we appear to be bouncing there yet again. Looking at the gamma exposure data, we've got positive gamma exposure from 400 all the way to the 500 strikes. So investors are still showing positive interest between the 400 and 500 levels. This could take some time to play out. This is forming what looks to be a wedge pattern, and if it breaks out, it does align with our gamma exposure data, which is essentially looking at open interest plus gamma effects from the option market. And so if momentum really starts to build in Tesla, we could see the 420 level hit as our first target, followed by the 450 level as our second target, and the 500 level as the final target. That could take 1 or 2 months to play out, but I think a bounce off of this zone like we've seen here yesterday, followed by a breakout of this downtrend line, could show some positive momentum kicking in the coming days if that does happen. So we've got our eyes on a few specific option strategies that we're looking to add to our portfolio, which, by the way, you can follow along as we trade in our community Discord. I'll put a link down in the description below.
Thanks, Anthony. Let's take a look at Lockheed, which had a pretty sharp decline down into the G2 dealer cluster zone. This is an area where we think dealers may become buyers based on gamma positioning. And you can see we have these big gamma clusters here, 450, actually all the way down to 440. The price has started to climb out of this zone. We also see volume at these higher strikes. There's been a lot of technical damage to Lockheed, but there may be an opportunity here to see this thing come back up towards the 470 to 480 area. We even had volume up to 490 today. One quick note about the chart, it's at this lower Keltner channel on the daily chart, and we just overcame the 4-hour Keltner channel. So on smaller time frames, it may have enough momentum established to take us a little higher, close to that 470 or 480 area. So I'm watching Lockheed here. This is more of an oversold bounce candidate. Gamma is negative at the moment, but we still reach that dealer cluster zone and looks like it can continue.
Thanks, Sean. Let's take a look at AMD. AMD trading below 120, really been struggling the last few weeks. And really, it's been struggling since March of 2024 when it was trading up in the 220s, I believe. And so basically cut in half in the last year. Still in a nasty downtrend. The lower dealer cluster zone looks like potential support, but that is at the 110 strike. So it's possible, judging by the options market, that market participants are continuing to position or at least protect themselves for more downside risk in AMD. It does look like we found some temporary support at the 115 level over the last week or so. However, we have the overall major downtrend resistance, which we are continuing to bump up against and reject from. So I wouldn't be surprised to see another rejection back down towards that 110 level.
Thanks, Anthony. Another one we've looked at in the past and actually had some successful trades off of it as well. Freeport McMoran, FCX. I've got that pulled up on our gamma dashboard, and you can see we have gamma up to 45. We also had high volume today at 45, volume at 50 and 55 also present. What interests me about the gamma picture is ever since we bottomed here at January 16, gamma's actually been climbing. Now, what's interesting about this is if you go to the chart, the price has actually been declining since January 21st. So we have increase in gamma, yet we have a stock price that's dropped. If we can get above this whole moving average at 37, we may have room to run to this to as high as 45 based on the gamma picture.
And if you guys are interested in accessing our gamma exposure dashboard, we are still running our winter special $300 off our yearly portfolio manager tier subscription. Use code WINTER2025 at checkout. You'll get access to all of our features, and we're actually adding several new features here in the coming weeks, including algorithmic trading strategies, real-time alerts, and several proprietary indicators, so you don't want to miss that. Link in the description below. You'll also get access to our community Discord. We've got a ton of great traders in there sharing their own personal trading strategies, trade setups, and market analysis. Link in the description below. You can check that out for free. Thanks so much, everybody, for watching, and we'll see you guys in the next video.